We've all been there. We went to YouTube and we looked up some kind of strategy. Now, I've been there myself 6 years ago, and this is also the reason why I wasted 3 years of my career. Now, the problem is that everybody who's promoting these strategies are not able to actually back it off with backtesting data. And we're not talking about 1 week backtest. That doesn't mean anything. This entire video is going to explain to you my strategy from A to Z, and I'm also able to back it off with backtesting data. I promise to you that this strategy is going to change your life, but only if you're able to listen to exactly what I'm going to teach you in this video. It's very unique, nobody's trading this way, so you can only learn it from me. Right, so first things first, we have to understand the fundamentals of any time frame for that matter. Now, this specifically is the daily time frame, and I want you to pay attention to every single candle wick. Do you notice something? Because it sounds so obvious, but most of you guys are just missing that. So every single candle high or low is going to be taken out, and that happens every single time. If you go back onto the time frame, you'll see that either the low or the high of every single candle is going to be taken out, and that counts for the daily time frame specifically. So that also means that if we just are very well at identifying the daily bias, then we can take a trade based off the daily chart just alone. We don't need any confirmation such as liquidity or whatever it's going to be. So let's just imagine every single day you know that the previous day low or previous day high is going to be taken out. Then you can take a trade just based off that. So as an example, if we know that the previous day high is going to be taken out for that day, then we're just going to put our stop loss below the previous day low. Now the problem with that is just that if you're going for a 1-for-2 with a risk to reward, then most likely you'll be stopped out. So let's just say that for that day, you knew that we're going to go higher, but you're just going to get stopped out because of this candle wick. Now, and there's also a couple of niche scenarios that you have to know about. And there's actually 4 different scenarios and 2 different categories. So I'm going to split the 2 categories and 4 scenarios into common and rare. Now, the most common thing that happens, especially on the daily time frame and any time frame for that matter, is that we're either going to take out the high or the low. So scenario 1 is going to be for the common category, that we're going to take out the previous day high, such as in here. The second scenario for the common category is going to be that we take out the previous day low. Now, but what about the rare occurrences? Because sometimes, and maybe if you have already spotted onto the chart, pay attention, maybe you can spot it yourself. Pause the video if you need time. We're not going to take out either side, right? So we didn't take out the previous day high. We also didn't take out the previous day low. So what do we do in that scenario? Because we did not identify drawing liquidity correctly in that case. So if you're going to look at the chart, where is it? It's right in here, right? We have not taken out the previous day high, but also not the previous day low. So in that case, you might be saying it was so obvious that we were going for the previous day high and not for the previous day low, yet we still didn't go there. But if you pay attention, if your stop loss is below the previous day low in that case, then most likely you'll also not be stopped out, even if the trade is going for a couple of days. Now, but if you really pay attention, this happens very rarely, right? Most of the times it is going to be the previous day high or it's going to be the previous day low that is going to be taken out. But the second rare scenario is that we're going to take out both sides. That can also happen. If you're going to pay attention in this little bit of price action, as you can see, this entire candle has taken out the previous day low, but also the previous day high. In these cases, it's kind of a 50-50 scenario, because either your take profit is going to get hit before your loss is going to get hit, or the opposite way around. There's no really in between for that one. Now, I'm also going to show you a way how even on those days, most of the times you'll still be winning, because the win rate of my strategy is 95%. Now, but what if I also told you that what I just shown you on the daily time frame works on all time frames, right? Every single time frame applies to this simple logic. We're either going for the previous candle, notice I'm not saying previous day high or low, we're either going to go for the previous candle high or for the previous candle low. If you just understand this simple concept, I promise you trading is going to get much easier. Now, pay attention to this price action. What can we see? We have a swing high here, we have another swing high here. If we're going to draw a line from left to right, these are going to be relative equal highs. Why do we care about relative equal highs? Is because the regular retail trader puts their stop loss right below these levels, right? Because he thinks that this is just going to be resistance, and then from here on we're just going to trade lower. Now, of course, that never happens, and most of the times it is also not going to work, because these levels where a lot of liquidity resides at are basically just magnets. Now see it as literally just a magnet that is pulling the price into a certain direction. of course the price is going to go towards the magnet and not away from it. Now, but even more interestingly, if we're going to go a little bit to the right, this is basically the exact same price action that I have just shown you, but on the daily time frame. So that also means that this entire candle is not showing in here because it will be tanking lower. Now, why am I showing this to you? It's because you don't even have to be right for the entire bias. So as an example, let's just say that this entire price action will be looking something like this. We're just looking at it from this point of view. And of course, the bias would be bullish and not bearish. Why? Because this entire candle is already trading onto the upside. So what's more likely to happen? Are we going for the previous day high or previous day low? Of course, it's going to be the previous day high. But it also means that the next candle, we're kind of wrong, right? Because the next candle was clearly a bearish one, and we've taken out the high, but also the low. What matters more is which side of the market has it actually gone to first. It has gone to the high of that candle. But the second thing that I want to emphasize in here is that you don't have to be right on the entire direction. Price didn't have to build a very big bullish candle onto the upside in order for us to hit a take profit. You don't have to be right on the entire bias in order to make money. Now, everything that I have just said about the daily bias should be well understood by now. However, there's one more detail that we like to pay attention to this little bit of price action. Pay attention to this entire gap. Most of you have been learned that you like to trade into the gaps, and then from there you like to trade away from them and then do whatever after that. Now that can work, and a lot of the times that will work, but what I like to do is trade into the gaps with a body closure. So anything that happened in this price action, in here, and everything up until this point is not something that I would say that, okay, I'm not going to use the gap as confirmation anymore. Why? Because I need the entire gap to be filled out with a body closure, right? So all of these candles on the lower time frame, because this currently is on the 1 hour time frame, this was on the daily time frame, all of this has to be looking like, as an example, on the 4 hour time frame, a candle like so. Only then I consider this entire price gap to be filled. Later, I'll show you an entire trade that I've taken where I've actually used the price gap concept. So now I'm going to show you how to apply this exact same thing onto the price action. So we are currently on a daily time frame. Now, don't make it too complicated. We are just having an uptrend, right? Why? Because we are making higher lows and higher highs, right? We have a break of structure every single time that we're trading higher. Each and every single of these price action moves is going to be a lag on its own. And what I really like to pay attention to is, have we fallen into the equilibrium of all of these price actions, right? So if we're going to take out this low, because the very recent low that has happened, we're going to put it in. Have we traded into the equilibrium after we have traded into the high of this entire price action move? Yes, we did. So that is telling to me the price action is efficient and we're actually able to trade onto the upside. Because a lot of the times, if the price action is just heavily going into one direction without having a pullback, that also means that it's heavily going lower again, right? And then in between, it's going to create all of these inefficiencies and then fill them out. And then it's just going to rebalance all of that. Now this looks a little bit more complicated than it actually is, but just stick with me. What have we just learned? Either the previous day high is going to be taken out or the previous day low. Because this is the current daily candle which has just formed, but we have neither traded into the high or the low of the previous candle. So this basically is already our confirmation that we want to trade higher. Why is that? Because all of these candles are going to be established movement. If we're going to go onto a lower time frame, such as the 1 hour, this will be looking something like this, right? This is already a small uptrend onto the lower time frames. So that's also indicating to me that the bias is bullish. What else do we have? I've just told you that liquidity is a magnet onto the market. Now, why are these highs a magnet to begin with? It's because if we go into the lower time frames, so our job on the daily is basically done. Now we're on the 4 hour time frame. What can we see? We have two swing highs being relatively equal close to each other. Now, in a case where you might be saying, but what about this entire price action? It's not a swing high. Once again, if you go lower and lower, eventually there will be a swing high. The reason why I also care about this is because if you have an FEG in here, that is also just an imbalance that the price likes to trade into. A lot of you guys think that you like to trade into the FEGs, and then from that FEG, you want to trade lower and target some kind of other liquidity. But I want to ask you a very simple question. If you're having price action like so, okay, right, and you have all of these kinds of FEGs right in between, I want to ask you a very simple question, okay? Where are we trading into? So let's just say that you know that price is going to trade higher and you want to trade lower, right? Where is the price going to trade into? Of course, into an FEG, and only then it's going to tank lower. But which of these moves is happening before? Are we trading into the FEG first and then trading lower? Is that the first thing that is going to happen? Or are we basically trading lower and then into the FEG, which doesn't make sense, right? The very first thing that happens, so number one, is we're trading into the FEG. Number two is going to be away from it. So why are you bothering about trading the number two? Basically, in trading, you never want to predict 2 steps ahead. You really only want to know the very next step. What is the very next price action going to be? That's the only thing I want you to understand. So that also means that we want to trade into the FEGs. So back to our example, FEGs like to be rebalanced and not be traded away from. Now, of course, you can also use them as support and resistance. That will also work. But in this case, we want to trade into it because the bias is just bullish. From this standpoint on, I am already going to pull out the entire tool. So now we are on the 1 hour time frame. We have already done majority of the entire analysis. And from here, there's a key requirement. You want to start your day at UTC standard time 0 a.m. Now this currently is 23 a.m. as you can see, but the candle closure of the 23 candle is going to be the candle open of the 0 a.m. candle. That's why I'm starting in here. From here we have done all of the entire analysis and we're just going to put our entire entry. Now we're going to enter with a market order. Our stop loss is mostly going to be 50 pips, but that's only for forex. Now in this case you can actually zoom out of the chart and refine your entire stop loss. In here there's not really a logical level that I like to put it into besides this candle low. Now usually you like to have some kind of FEG that is somewhere in here, right? Then you can base it off from because price has traded into the FEG and then higher. This will be a very logical level. Since we don't really have that, we're just going to keep it very simple at 50 pips. Your take profit is mostly going to be 10 pips and it's straight up going to go to the previous day high. Now, if the take profit is overshooting the previous day high, then it's also okay, but only as long as it's just a couple of pips away from the previous day high. So from here, the win rate of this strategy is so high that I want you to risk 3% on every single trade. No matter if it's a prop firm, on a personal account, I'm even risking more than 3%. Because what's the likelihood of you losing 10 times in a row with this high of a win rate? So from here, we simply want to take the trade. Even if we go into a drawdown, that's no problem. We are already prepared for these kinds of moves. Because if we're not going to put our stop loss this high, FX replay is just bugging. Speaking of FX replay bugging, TradeLens is going to come out with a full backtesting session with clean candles and not these kinds of problems that FX replay is going to give you. It's way cheaper, way more affordable, way more professional, and it's soon to be out. Now the time of recording this video is the 19th second. That's why I cannot skip all the way to the end. If we're going to TradingView, where I've actually taken the entire position and did the analysis on, for the students in my mentorship, as you can see, we have actually hit a take profit on that one. So here's going to be the next trade breakdown. Right from the start, we're on a daily time frame. Now there's also going to be a couple of reasons why not to take the trade, such as in here, but more to that in just a second. First of all, we want to ask ourselves, are we going for the previous day high or are we going for the previous day low? Now, for the candle to basically do a 180 on us, how would it have to look like? Always keep that in mind when you're not sure about the daily bias. The entire candle would have to look something like this to go all the way to the previous day low just for the trade to not play out. What's the likelihood of that going to happen? Very low. So we're going to target the previous day high. What else can we spot on the daily chart alone? We have a little bit of consolidation going on. What we already like is that the liquidity has been taken. Now, previously I explained to you that you like to trade into the FEGs, right? So you have some kind of FEG level and you like to trade into it and not away from it because that's the first move that is going to happen. Now, with liquidity, it's a little bit differently. When you're trading lower, right? When you're having a downtrend for that example and you want to trade lower, you want it to take out liquidity first. Now, and this is not just a random thing that occurs onto the time frame. This is actually essential for the trade to actually run lower. Because that entire move that it has traded higher is the fuel that it can continue lower. Just like a car, without fuel, the car is not going to run. Now from here on, it's going to tap into some kind of higher time frame, and then from here it's just going to trade lower. All of that is quite well, but we're going to keep it even more simple. Keep in mind, guys, I'm a very simple trader. Previous day high or low. Now the bias is already confirmed. We are trading onto the upside. Is there some kind of more reason why we're going to trade higher? Yes, there is. As you can see, we have all of these relative equal highs. Now, it doesn't even mean that the entire price action is going to trade within this single day all the way higher, which in fact is actually impossible. The reason for that is, if you're going to measure every single candle, this is 55 pips. Let's even take a very extreme candle such as this one. This is an outlier candle. It's 80 pips. For us to move all the way higher in here, we would need another outlier candle. Outlier candles are not coded like that for no reason. They're happening rarely. So we don't even have to trade all the way to the relative equal highs. All that we really need is the previous day high. And now we're going to drop down onto the 4 hour time frame. Now in the 4-hour time frame, it's going to be similar of a story. I've previously told you that you don't like to trade into the FVGs. You like to trade away from them. But that doesn't mean that they're just useless and I never use them as support. If the bias aligns, right? If I already want to trade higher, then of course I will also just use them as support, because this is going to become a protective low, which doesn't mean that it can't be taken out, but that's just an indication that most likely the price is going to trade higher and not lower. From here, there's not really much to say because we don't really like to keep it complicated, right? We like to keep it simple. From here, we're going to go to 0 a.m. UTC Standard Time. Once again, 23 a.m. candle, 50 pips stop loss, 10 pips take profit. Now in this one, we can actually do a little bit of entry refinement. As you can see, this is the entire previous day high that has not been traded into yet. Since we're just so close onto it, we're just going to put our entire entry, we're just going to put our entire take profit to the previous day high. This is going to maximize even more profit. Now pay attention to the stop loss as we're going to go into the daily time frame again. Just imagine a scenario where we're actually wrong on the trade. The trade is going to continue lower, and do you really think that price is going to continue all the way lower in here and then continue higher? If it has gone so much lower, then it's just going to be a stop loss hit. So we're just going to put our entire stop loss at the previous day low. Price is not going to magically do something like this, taking out the previous day low of that entire candle and now shooting up. No, if it's going to go all the way lower in here, this will be a loss. So going back onto the 1-hour time frame, we just want to take a trade. As previously mentioned, 3% risk. The win rate of the strategy is very high. You're not going to lose like 5 times in a row. Now you have to be prepared for these kinds of things. You will get into a drawdown. That's a negative risk reward, and that's the price you're paying for having such a high win rate and basically winning every single day. You have to also pay attention to what the price is actually reacting to. Price is not just reacting out of nothing, it's actually falling back into an FVG, and then from here it's actually trading higher, as you can see. This is the entire trade that I've also actually been taken, and it has been documented in my mentorship. So this one is going to be USD CHF. If you haven't noticed, I really like trading the CHF pairs because they're just very good in price action. Now, whatever I told you previously, we have a price gap in here, and we like to trade into the gaps with a body closure. Before that hasn't happened, I am still keeping this as confirmation. I've also told you previously, if you're having massive FVGs, those are going to be rebalances. Don't worry, I'm not going to tell you that you need to trade into the FVGs another time, but just keep in mind, the bigger the FVG, the more imbalances it contains, which also means it's going to be a bigger magnet. So I'm going to remove a couple of things. If we're going to take this entire price action leg, have we traded into an equilibrium? Just out of experience and also thousands of trades that have been backtested and also journaled for you to look at, join my Discord if you want more infos. I know that if we're getting very close onto an equilibrium and we have not traded into it, that already counts as sort of liquidity that we want to trade into. Now that on its own is not going to be enough, because we also have a BPR range. BPR ranges is basically when you have one FVG and another FVG combined with each other. This is basically just an upgraded FVG. From here, we're going to drop down onto the daily time frame. As you can see, we have not traded into this gap, and still, even to that point on the daily time frame, this entire gap has not been traded with a body closure. Pay attention to this little bit of price action. Yes, we have traded into it, but the candle body did not fulfill it. So this still counts as confirmation. The daily bias, what is it going to be? If we're just going to look at this daily candle, just focus on it. I'm going to zoom in for you. Are we going for the previous day high or for the previous day low? First things first, we already have our established movement onto the upside. This is going to be an uptrend on the lower time frames. What else do we have? All of this is what? Liquidity. This is going to be your internal relative equal highs, and these are going to be your external relative equal highs. Combined with an equilibrium that we already want to trade into, this is an A+ setup. If you're not taking these kinds of trades, you're going to miss out on a lot of money that has been made with this system. So now we drop down onto the 4-hour time frame. We already want to set up the position, and I'm mainly looking out for things on why the trade is not going to play out. So if we would have had relative equal lows right in here, then this would be an indication that the trade is not high probability or not as good as we thought it is. Now that doesn't mean that I'm not going to take a trade, because once again, for the trade to tank all the way lower in here is quite unlikely. Since we don't have that, our entire stop loss is going to remain right at that candle low, because it's very likely that the price is just going to reverse like that on us. So, which also the previous day low. I've told it to you in the very beginning. Previous day high is going to be your take profit, and previous day low, your stop loss in a bullish scenario. So now we will drop down onto the 1-hour time frame, and actually refine the entire trade. So this is how the trade will be looking like. We are not at the 0 a.m. candle, so we're just going to skip that real quick. So this is how the trade will be looking like. But if you really paid attention throughout this entire video, then you would notice we are not at the 0 a.m. candle. How is that? You have told us that we're only going to trade at the 0 a.m. candle UTC standard time. We're not there yet. It's because I'm going to take this trade, and after this video has been uploaded, most likely this is already going to be a take profit. Go check it out for yourself. This is the 20th February 2026 USD CHF, and I know that this is going to be a take profit hit. Why? Because the win rate of the strategy is so high. Now on the screen right now, these are just a couple of my backtesting sessions which have been fully documented in my mentorship. For the people that are wondering, how am I going to pass profit challenges with this? First of all, you're not only just going to take one trade a day, at least if you're more advanced and if you know how to trade other pairs. Second of all, I have a prop firm passing service. If you can't pass prop firm challenges on your own, but you already have a proven system that works, then I'm going to pass it for you for a fee. And in case where I don't pass, you'll get all of the money back. Not only the money that you paid me, but also the money that you have paid the prop firm. Now on this side of the screen, there will be a video explaining everything from A to Z, what I just explained to you, but even in more detail if you're really serious about learning this. If you still haven't clicked on the video, like the video, subscribe to the channel, and comment down below if you have made it this far into the video, because here's actually my golden play button.